Hello traders, Gary Wagner here, approximately 11 a.m. in Honolulu. It is Thursday, the 3rd day of November, and this is the daily report for gold and silver. In an apparent nix to the referendum, we have now heard that there will not be a referendum vote by the people tomorrow in Greece, and that the latest news is that the Prime Minister has actually offered to resign. We have gold sharply higher this morning. We have silver higher. We have the equities markets higher. S&P's higher across the board, and the dollar down. Very interesting day, a continuation of the roller coaster we call our global and international markets. First of all, when we look at our gold market, of course, we did recommend buying across the board, both gold and silver. We are trading up around $25 today, $1763.55. We will begin by looking at our most current chart in the cash month, and this is a daily chart of gold. As you can see, the morning session is closed. This is the beginning of the afternoon session as we look at the market. This market has been up sharply, and when we look at the candlestick pattern itself, we talked about this a little bit yesterday, but we had this conflicting scenario where we had a three-river evening star formation. Following day, we had a three-river morning star formation. But today, what is important is that we actually got the confirmation of that pattern. So what we now have is a three-river morning star variation with a strong confirming candle, taking us up, as I said, up about $25 on the day. Now, where are we looking for it to go? Traders that got into this position would have gotten in either on the close, or there were actually points in which the market was much lower during the evening session last night, but the close, as I said, was roughly at, call it 1738, 1739. It did have a low, though, if we take a look at it, just right around 1724. And for those of you who recall my strategy over the last couple of days, what was important to me is that at least on a closing basis, we would see this support line, call it 1725, this support line here hold. And in fact, there can be no doubt that support has definitely held on the day. And of course, now we're seeing this market move to much higher prices. Well, where are we looking for it to go? Of course, we've got to make it over our next target, or next, call it, resistance level. I think it's going to be minor resistance, but we do have resistance 1772 to about 1780. I think that we're going to see a little bit of resistance between, I'll call it 1772 and 1775. We have very strong support right now, 1726. We saw that the market tested that area and really bounced off of it strongly. So let's see how it reacts. If in fact we can see this market move higher, 1775 is my next target. And then if we continue this rally, which I believe at this point is going to be a fairly sustained rally, I think that there's a real opportunity for us to break the $1,800 ceiling or barrier once again. The next chart that I would like to look at is going to be our silver chart. And, silver, along with the other equities markets, have been higher. What I'm finding really interesting right now is we've had this roller coaster ride, and now we have the equities markets sharply higher, precious metals markets sharply higher, and the dollar down. So things have turned around quite some bit. Now, you can see it's a different story here. Up about 22 cents, call it 34.50 in the market right now, up between 20 and 25 cents higher. You can see the day's activity, again, almost a rickshaw man, a very close open and close in terms of the body of the candle. Tremendous range on the day when you take a look at the low. Again, this low testing and getting near yesterday's low, but you can see this real strong support right at $32.90, call it $33 an ounce. We see very strong support. Resistance, on the first level is still going to be roughly $35 per ounce. And my personal sentiment is that we should see this market. Of course, it's first got to be able to fly to this area above this and then maintain itself above this area, meaning the first key is going to be getting above 35. Once it can do that, we're going to be looking at 37.80 as our upper level target in silver. Now, when we look at our S&P, the Standard & Poor's 500, we have an interesting scenario brewing there. We had this, call it a piercing line almost. A piercing line, though, is a little bit different. And the difference is that in a genuine piercing line, the market will open below the close of the prior day and then trade up and close at or above the midpoint. That is the standard definition of a piercing line. If it's able to trade all the way through the range, in other words, if this 2 days was really a one-day move, you would get what's called an engulfing bullish. This is a piercing line confirmation. However, it's not a true piercing line, and rather it is a candlestick that is sometimes simply called a harami. Harami meaning pregnant in Japanese, but to the Western technician, it is simply known as an inside trading day. An inside trading day, you've got confirmation of it today. You really have no real resistance up until these recent highs right around 1290 on the S&Ps. On a technical basis, I would look for the Standard & Poor's to move higher. And then lastly, I do want to take a quick look at the dollar index. Second day in a row that we have this dollar under pressure. As you can see, we have had this almost an incomplete dark cloud cover, but my sentiment, as I talked about the other day, is most importantly, we've got this gap in there. And it is my belief that this market will come before it really does anything and go ahead and fill this gap. That's my sentiment. Maintain your long position in gold. Maintain your long position in silver. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for the weekly wrap-up and review. Bye-bye.